Berkshire Hathaway's annual shareholder meeting kicking off this weekend. Warren Buffett's cash reserves, succession plans, and commentary on tariffs in focus for investors attending. With us to break down what to expect, we've got Lee Munson, Portfolio Wealth Advisors President and CIO. Lee, great to have you here with us. You know, if you were to kind of mark down on your checklist, what is the priority for investors who are kind of using the Oracle of Omaha as their North Star for their investing thesis? What should they be paying closest attention to here?
First of all, I think that the thing that is most misunderstood is the cash hoard. I've never seen people so interested in that cash hoard. It's been going on for months. It happened because they sold Apple. It was a huge position. I think that this is what you should learn from it. It's not about, did Warren Buffett have a bunch of cash because he knew all these things were coming? It's that when you have 3, 4, 5, 6, 700% gain because you bought Apple 10 years ago and you made a good buy, it's okay to bring down that concentrated position. It's okay to take some profits, circle the wagon, and do some research and not just put it right back in the market the next day because you read something on Wall Street Bets. So I am interested in what they are buying. We've seen over the last so many months, they've picked up some aerospace. They've got this little company called HEICO. I own something sort of in that space called TransDigm. The other thing I want to see is buybacks. Are they going to be increasing buybacks? That tells you, basically, do they think they'll make more money, erasing and incinerating Berkshire Hathaway shares, or do they think they can make more investing? But I think that for me right now, I want to know about succession. I want to know if Greg Abel's really going to take over. I want to know what kind of size he's going to be trading, what kind of responsibilities he's going to have, because I think for a shareholder, that's where it's at. Let me just warn everybody. There's two things not to take away. A, don't read into the cash hoard. That just has to do with their own rhythm and this Apple position. And number two, Warren Buffett, I love him. I've studied him my entire life. But he's not good on the macro. He was wrong about inflation for 30 years. So you got to stick to the things he really knows. And that's how you read him to perfection. So when he starts talking about stuff at Geico, the information they have from the insurance arm, when he talks about those type of trends, that's what you want to focus in on because that's what they have the most data and that's where he's best at forecasting. What you want to do is you want to separate out the throwaway comments he might make on inflation or other macro things because, I'm 50, guys. Every 5 years, I read about how Warren Buffett tells me, I was wrong about this macro call. I was wrong about this macro call. It's like Groundhog Day. Yeah. So just take it with stride, really look at what he's buying, and generally buy it 6 months later.
Well,
they're not good traders.
Let me double click on that because what's really interesting about what you're saying is don't read into the cash hoarding. However, Buffett himself has said there just wasn't an opportunity that I liked to put that money to work. Can investors anticipate hearing from him over the weekend about opportunities to put that cash to work?
Well, that's what we're all hoping, right? That's what we're always hoping and praying every time we see one of these meetings is he's going to say, hey, I bought a couple new things, right? And I have no idea what that's going to be, but that's what you really want to focus your attention on because it tells you sort of the forward trend of what he's thinking about and where he thinks value is. But remember, they do make bad calls. They do get in early. And I think that for investors, don't, just because you hear it, don't go out, it's like the stockbroker on his first day. He goes down to the payphone, and tells his dad, I just heard the most amazing story. You have to put all your money into it. But I do think I'm interested if he's further investing in aerospace, if he's further investing in things in that military industrial complex, that's where I'm most focused on. And I want to see if he's increasing the size of some of those bets. Because remember, as far as what they really own, it's a bunch of Apple, and then the next two positions are Amex and Bank of America. And that's really the bulk of what's going on. So it's going to take years for them to really pump up these other positions. So go slow, do your own research, and just do what Buffett did.
But they trimmed a lot of that Bank of America position as well coming into the start of this year. So to your point, where are you kind of front running the trade that could be announced? Are there specific companies that you're looking at right now within your own portfolio that also might overlap in the Venn diagram with Berkshire Hathaway that you're leaning further into in anticipation of what they could say?
Yeah, I mean, most directly, like I've said, aerospace, I think we're going to see more in their investments that they made later last year with HEICO. You just think about choppers and jet planes and all the parts that have to go into that. There's such a huge runway, so to speak, for OEM parts and all of that stuff going forward. I think the other thing that it's telling you is banks aren't where it's at. Right? Everybody talked, after the election, how banks were going to dereg, how all this is going to be great stuff. I think that you can see from his moves that he doesn't really think that that's going to be the same type of momentum as other places. I also think that you want to look at any type of industrial manufacturing that he's purchasing. I'm always looking at what's going to do well over the next year, next 10 years, not the next year. And that's what we're going to see. So I think financials are out. I think aerospace and those type of things are in, and we'll get more information from them. We'll see.
Yeah. So Lee, I'm fascinated in you also saying that Buffett, he's not that great at the macro, but one thing investors certainly want to hear from him is his reaction to tariff policies. We haven't heard much from him on that. How much do you think we will hear?
Well, my young analyst just sent me, as if we just discovered it, Fortune magazine, 2003, all Buffett was talking about 22 years ago was basically, we've got to have tariffs, we've got to deal with the trade deficit. So it's going to be interesting because he's a Democrat. I'm a liberal guy myself. But how is he going to react 22 years later from his own assertion that we've got to stop this trade deficit 22 years ago, that we have to have some form of tariff. He had some gimmicky thing called import certificates that he was floating around back then. I was there. And so now granted, he could say it's too fast. We all agree. He could say it's executing improperly. We all agree. But I'm really curious to say if he's going to say anything to the effect that we shouldn't be cutting new trade deals because we should be, and that we shouldn't be addressing this trade deficit because that's always been something that's been a theme of his. So we'll see how politicized he's going to get. I think people are going to be surprised about a more moderate tone on the tariffs, but also, we all got eyeballs.
We didn't have the first iPhone 22 years ago, though, Lee.
Yeah, I know. It was a very different world. And also, it's a very different world from the 80s. A lot of people like to show that speech from Reagan about how tariffs are bad.
Right.
It is a different world, but I'm just as curious as you. But I do think the bottom line is don't read into cash. Listen to what he knows about the insurance business. It's what he knows best. And I think it's out of the financials and back into things that, making things and stuff we need.
All right, Lee, we got to leave it there. Thank you so much. Shout out to the young analyst sending you the articles. Really appreciate it, Lee.
Jesus.
Berkshire Hathaway's annual shareholder meeting kicking off this weekend. Top of mind for investors will be Warren Buffett's succession plans as the Oracle of Omaha nears his 95th birthday. So who could take over CEO of one of the world's most influential companies? Well, his name is Greg Abel, and his designation as the next CEO of Berkshire was accidentally announced by Charlie Munger several years ago at the shareholder meeting. But who is this guy? The Canadian businessman has been with Berkshire for 25 years following the company's acquisition of Mid-American Energy, where he served as CEO. He currently chairs Berkshire's Energy and has been instrumental in managing the company's diverse portfolio of non-insurance businesses. Buffett has expressed full confidence in Abel's ability to lead, stating he is 100% comfortable with him as the future CEO. Abel's leadership is expected to preserve Berkshire Hathaway's culture and conservative financial approach, ensuring continuity in the company's operations and strategy.
Berkshire Hathaway's annual shareholder meeting is on deck this weekend. Here for a closer look at its holdings is Yahoo Finance's head of news, Miles Udlin, here with us in the studio. Miles, we always look ahead to this meeting to get more insight into what Berkshire's holding, what Warren Buffett is thinking. But talk to us about the top holdings and kind of as a scene setter, if you will.
I mean, it's really just a story about Apple. I mean, we got the earnings last night, and the company comes out. They say it's going to be almost $1 billion headwind in the current quarter, and they wouldn't go beyond that. So, stock's down today. Buffett's largest position, even despite the two-thirds that he's sold 2/3 of the position over the last couple of years. So down significantly, but still the largest holding within Berkshire's equity portfolio. So certainly a lot of questions there. There'll be a lot of questions about Berkshire's overall tariff exposure. I think what Buffett himself makes of tariffs, because there was a Fortune op-ed, I believe it was, from the early 2000s, where he was like, China entered the WTO and we don't really have any domestic manufacturing. We should probably look at that. And maybe tariffs aren't all bad. And I would imagine questions along those lines and Buffett giving answers along the lines of, it's not necessarily the diagnosis here, it's some of the approach, which I think is a common theme when it comes to discussing tariffs. So we'll certainly get some of that. And I think what we heard from Apple last night is basically kind of why he has paired the position, but also why he still owns it. The company comes out, $100 billion stock buyback. They raised the dividend again, so Berkshire's getting a ton of cash, and they're getting a larger share of Apple just mechanically by owning the number of shares they do, and the buyback cancels some of those out. So that, I think, on the equity portfolio is the main line of questioning, though. As we get towards the end of the line for Buffett, I think that portion of Berkshire Hathaway just becomes less interesting.
What about that cash pile he's sitting on? More than $300 billion.
Yeah.
The fact that he's sitting on that, are there broader lessons learned for investors that we should take away from that, Miles?
I think the lessons are pretty clear. He didn't have a lot of other uses for that cash, and a lot of it's parked in T-bills. So you're getting, depending on the tenor, 2, 3, 4% wherever you're parking that, and that's not nothing at $300 billion worth of cash. So I think that's certainly part of the conversation for Berkshire. And look, the problem that Buffett and Berkshire have had, and this is never going to change now, whether Warren's running the company or not, is they're now too big to do a lot of things that make an impact on the overall portfolio. Like, they came into Apple, it's going to be 9 years since they first initiated the position. And at that point in time, you might know better than I what the market cap of the company was. It was smaller, but it was still among the largest in the market at that time, has been among the largest in the world for the entire 9-year period, and is kind of the only company big enough that can handle Berkshire coming in with huge buys on a very regular basis that doesn't, and that money on its own doesn't push around the price of the stock, because that's the problem when you're sitting on $300 billion in cash. They haven't bought a lot of companies outright. They did the Pilot Flying J deal a few years ago, but they haven't really been acquisitive with the money. So sure, are they going to buy Coke outright? I don't see that happening. They're going to buy American Express. I don't see that kind of thing. I could be wrong, but it just has not been the Berkshire Hathaway really since the Precision Castparts deal in 2015. They haven't done anything big. So what are they going to buy? They bought Japan trading houses. They could go buy shares of something else. But when you have that amount of capital sitting there, Buffett clearly doesn't see anything that he loves, that he wants to deploy new capital into. So you see that cash pile grow. The interesting thing about this timing always is that we'll get the 13F from Berkshire in the middle of the month, so about a week and a half from now. So he may be doing stuff like this happened with Apple. He did the annual meeting, didn't say he bought Apple. A week and a half later, it's like, oh, I bought a ton of Apple, bought about 10 million shares of Apple. So we might have a situation like that, but ultimately I think it's just a portfolio that reflects an investor who doesn't see a lot he likes, and it's new money. We talk on the shows a lot with portfolio managers who are in the market. They have to do something, right? So it's like, do you like this more or less than your other options? For Buffett, it's new cash. So it's very hard to go from zero to something in this kind of environment, no matter who you are and whatever you're looking at.
All right, busy weekend for you, Miles. Thank you, appreciate it. For more on Berkshire Hathaway's upcoming shareholder meeting and what to expect, we have Bill Stone now, Chief Investment Officer at the Glenview Trust Company. Bill, it is good to see you. So Berkshire earnings on deck. I'm curious, Bill, what are you looking for? What are you expecting to hear?
So I think the big picture is it's kind of easy to predict, and you talked a little bit about it earlier, the cash pile. So just because of the $330-some billion cash pile, you are guaranteed essentially to have a very large amount of interest income. And that's probably the biggest thing that will likely overwhelm everything else. Then you got to look at, okay, how many catastrophe losses did they have from the LA fires? Again, I think the cash pile will overwhelm that, or the income, and they probably did some pretty good underwriting otherwise. After that, I'm going to be delving into really the status of Geico. They've started to seemingly get growth again out of that business. So I'll be interested to hear if that continues and where it kind of stands in its turnaround. And then lastly, maybe two things, BNSF. They've done some good work in making that railroad more efficient. Want to hear where that is. And then really last but not least, Berkshire Hathaway Energy, which is obviously a big piece. They're up against relatively easy comparisons, so that actually should look pretty good as well.
Bill, as an investor, are you disappointed that there hasn't been more active investment going on?
It's always a hard answer because I think, yes, I mean, in the sense of I would love him to have gotten more opportunities on one hand. But, he's picky, and that's been a good thing over time. I think he's still waiting for another big opportunity, obviously, like always, and he's got the cash to do it. So, I think most likely we're not going to hear anything at this meeting about something big they did. I guess it's always possible, but I'm not holding my breath on that one.
Also, Berkshire has not bought back any stock since May 2024 per Barron's. And of course, the Oracle value investor, price conscious. But what do you see ahead in terms of potential capital return, Bill?
I don't think you're going to see any buybacks in this quarter either. I think that's, I say it's not a disappointment. It is. I mean, I loved the stock was way more attractive, I say, for investors when you had kind of that double-barreled move of, growing operating income within Berkshire Hathaway and them buying back shares. It was really potent. Now you really just have to, at the moment anyway, count on the growing of operating income, which I think they will continue to do. It's just that, you'll have to, it's kind of like a lot of things, you'll have to wait for a better opportunity in Berkshire to see that get back to buying back shares. I guess, again, it's since we already own a lot of Berkshire, it's like you don't really want to root for that, but it'll take the stock kind of falling, or at least earnings kind of running for a while without the stock going up for that to happen, I think.
Bill, there's a lot of anticipation about Buffett maybe weighing in on the macro environment, right, on tariffs, et cetera. What do you want to hear from him, or what would you ask him on that front?
I guess I would try and be as sneaky as possible. And I guess it's not really sneaky is not the right word, but I suspect he's going to try and not answer, politically speaking. But I think if you asked him what's the impact of tariffs on Berkshire Hathaway's businesses, you might get the actual answer, right? Like, I think he tries to be very diplomatic about it. If Charlie Munger was still here, you might get a more straightforward answer. So I think that's the way I would go at it if I had a chance to ask him.
Bill, finally, Bloomberg had a good piece today, how the Buffett indicator, so this measures the ratio, total value of the U.S. stock market divided by the total value of U.S. GDP. Bottom line, Bill, it's at its lowest level since early September, so perhaps signaling equities are relatively cheap here. Bill, I'm just curious how closely you follow that Buffett indicator.
I don't, because I don't think he's spoken about it for quite some time. I think he's, to be honest, kind of left that behind. And I think there's good reasons for that. I think with particularly U.S. companies, let's just focus on that being so international. It's not particularly helpful to look at it versus just U.S. GDP. You've got something like 40% of revenues for S&P 500 coming from overseas. So I'm not sure, like I said, I don't recall him talking about it in quite a number of years. So I'm suspecting that, he may not really be focusing on it either.
Bill, thanks so much. Have fun this weekend.
Thank you. I will.
Let's take a look at Brooks Running. In the first quarter, Brooks Running reached record quarterly revenue with global sales growing 15% year over year and 13% growth in North America. These milestones coming alongside uncertainty in U.S. trade policy and sliding consumer confidence. Dan Sheridan, Brooks Running CEO, joining us live from Nebraska for its parent company, Berkshire Hathaway's annual meeting. I'm also joined by my Morning Brief co-host, Brad Smith. It's great to speak with you this morning, Dan. Talk to me about the extent to which you are anticipating these tariff policies hitting your business. In January, you told our network that you were already concerned about the headwind, and that was before triple-digit tariffs on China.
Yeah, good morning. Thanks for having us. We're joining you here live from the Berkshire Hathaway shareholder meeting. We just finished a great quarter, up 15% globally, and our demand signals are incredibly strong. But we've got a lot of uncertainty ahead of us with the tariffs, and so we're going to work on it. Like every business, when there's uncertainty, we're leaning into our partners in Asia. We're thinking a lot about the markets we compete in, and obviously price increases are a part of that. So uncertainty ahead, but we feel really good about the category that has been durable in times of economic uncertainty, and we think it will be here too.
We've heard from representatives, Dan, in the past from Brooks Running saying that running is recession resilient, but is it tariff resilient as well, considering how consumers are clearly shifting their own sentiments, knowing that they're going to be potentially paying a lot more for normal things, and that includes running shoes.
Yeah, great question, Brad. I think the way we view this is that, this is a considered purchase. Performance running gear for runners is super important. And so what we've seen over time is it is recession proof. In times of economic uncertainty, we've actually grown every single time. Go back to 2008, even in 2016, 17, and obviously COVID. So we believe the category will hold up. But we know that there's sensitivity to price in our category as well. And so we're paying attention to that. We're being smart in how we think about pricing around the world.
Knowing the arm's length that you have to Warren Buffett and the business, what is he advising the business right now, especially knowing that companies have the difficult decision of trying to figure out, do we absorb the tariffs, or is that something that we pass on to the consumer? And how are you thinking about that? Do you need to pass that cost to the consumer?
Yeah, I mean, I think the beauty of being a Berkshire brand is we always think long term. So even in times like this, we're thinking 3-4 years out. And I think that's important in times of uncertainty. So Warren's sage advice to us over time is focus on your customer, which we're going to do. And so as we look at the landscape and what tariffs are bringing to our business, we'll continue to consider how it impacts our customers, our partners, our retailers around the world. And I think it's super important for us to stay focused on the customer.
Dan, are you raising prices in response to tariffs?
Yeah, we'll have some slight price increases. We're trying not to overreact, right? Because of the uncertainty, we don't know which way the tariffs will go. And so we're trying not to overreact. And the truth is we're looking at the entire supply chain at Brooks to get smart on cost optimization and efficiency. And I think most businesses are going to do that in this time.
And I know you mentioned that you are going to raise prices. How are you thinking about the degree to which you need to raise those, especially as negotiations are ongoing?
Yeah, it's a tricky one, right? I think what we do is we focus on obviously the competition and the market we play in. We're the #1 brand in performance run here in the US. And so we have some pricing power, but we don't want to punish the consumer because of these tariffs. So we have to be pitch perfect in this. And we're looking at prices right now. We think, on average, it'll be probably 2.5% to 3% increases on select styles, not every style. So I think we can navigate this, but obviously there's a lot of uncertainty for us.
Dan, we have to hustle to the finish here, and I know that your sneakers on the ground there at the Berkshire Hathaway meeting. And so as you're kind of thinking about the business right now, has the risk of tariffs changed where you're sourcing materials from and supplies to build out and manufacture shoes? And then just lastly, on the back of that, which shoes is Warren Buffett wearing?
Well, so in terms of the supply chain, look, we're somewhat fortunate because we've moved our supply chain to Vietnam and Indonesia, not immune to the tariffs, obviously, but to some less degree than the China source base. So we've got a really nice, resilient, and agile supply chain right now. However, global trade war could change that. I think Warren's probably wearing the most comfortable shoes in the expo here, and I would assume they're Brooks, but I haven't seen them yet this morning.
Sneakers go well with some suits. I try it. I try to pull it off, Dan.
I love it, Brad.
All right, Dan, thank you so much. Appreciate your time, and also thanks to our own Brad Smith.